Hello student, here we study business accounting of FY Bcom semester 1. In that, our first unit is meaning and scope of accounting. The meaning of accounting is the process of recording financial transactions pertaining to a business. The accounting process includes summarizing, analyzing and reporting this transaction to oversight agencies, regulators and tax collection entities. Every person, businessman or otherwise concerned with the money matter cannot fully rely upon his memory. The amount, volume and the duration of such money matters make necessary to create a record of the different transaction during a period. A businessman needs such records for two purposes, namely हम बोल सकते हैं ascertaining the working results of the business and to increase in his net asset. These purposes can be served by a systematic record of all monetary transactions relating to his business. For other persons, also a record of the financial matter is necessary to quantify the surplus of income over expenditure and assets over liabilities. The systematic record is kept in bookkeeping. So, accounting is a work where we analyze, summarize, reporting whatever we record in bookkeeping. The definition of accounting is the art of recording, classifying, summarizing in a significant manner and in terms of money transactions and events which are in part at least of a financial character and interpreting the results thereof. Then our next point is scope of accounting. The scope of accounting, in that while we are seeing that first point is information, or we can say that data creation and collection. In that, information creation and collection is the area which provides raw material for accounting. The data collected is historic in the sense that is referred to events which have already taken place. It is a past history of events. In modern accounting, data is to be predicted as and to be prepared for future. Then second point is information recording. After collecting the historic data, it is recorded as per the generally accepted accounting principles. Accounting principles are the body of doctrine commonly associated with the theory of and procedure of accounting, account serving, and as an explanation of current practices and as a guide for the selection of convention or procedure where alternative exists. The process method employed for recording may be manual, mechanical or electronic. A computerized system can also be used for processing purposes. Then next point is information evaluation. Evaluation of data include controlling the activities of business with the help of the budgetary control, evaluating the performance of the business with the help of different tools and techniques, analysis the flow of funds and analyzing the accounting information for decision making purposes by selecting appropriate checking system. This data evaluation has another dimension, and this can be known as audit work, which is nothing but examination or verification of authentication of financial information. This work is done by public professional accountants. And the last point is information reporting. It means reporting is a journey which starts with the known to unknown. The purpose of reporting is generalization of data. These data reporting consists of two parts, external and internal. External reporting refers to the communication of financial information to outside parties. For example, contributors, governmental and regulatory bodies. Internal reporting concerned with the communication of results of financial affairs to be management for decision making purposes. Then our next point is need of accounting. There have some need of accounting. The importance of accounting business within businesses comes from its ability to keep track of An organization financial health and reliability. Without an accountant, business owner would not be able to analyze their financial health or know whether their business is profitable or not. Basically, accounting is necessary to record all the transactions of the business and maintain proper books to show assets, liabilities, capital and profit and loss, as well as up to date record help business houses to compare current financial information to past data. In that, the first point is financial transparency is there. For that, there is a need of accounting. Accounting provide accurate information to help ensure that organizations are financially transparent. Then next is regulatory compliance. Accounting helps organization to meet their legal obligation and disclose financial statements to regulatory bodies. Then next point is decision making. For taking some decisions regarding the business organization, the accounting data is very useful. That accounting data provide the data that help organization make informed decisions. Then performance assessment, the performance assessment, how the company, the business performed this year or the previous year, they get an idea about their performance on the basis of accounting statement. Because of if the company getting more and more profit, it means their performance level is very good. But if the company faces some losses, that time there have some issues regarding their performance. So the performance assessment is also get the knowledge about the accounting. Accounting helps stakeholder understand how well an organization is performing and if it is making the most of its money. Then financial health. Accounting help businesses improve their financial health by tracking and managing income and expenses. Then next point is investor and employee confidence. Good accounting practices can help build confidence and loyalty in employees and customers. Because of they can, if the accounting statement showing the fair straight result, that time the employees and customers confidence will be increased and they are interested to invest in, and employees are interested or they are satisfying while they are working in that organization or that company. Then financial safety is also there. Accounting can help protect a business from financial liabilities by creating financial safety nets, filing taxes and planning for expenses. Then next point is historical data. Accounting helps businesses to keep accurate record that can be used to plan for the future. And the next point is daily life. Accounting principles are used in many aspects of daily life, such as tracking spending, paying bills, and shopping for groceries. Then our next point is bookkeeping. Bookkeeping means it is a process where we recording our business company's financial transaction into organized accounting on a daily basis. It can also be referred to the different recording techniques business can use. Bookkeeping is an essential part of your accounting process for a few reasons. Even also, while we are studying bookkeeping where we record only transactions of our business, it is an art of maintaining books of accounts in a regular manner, systematically and more scientifically. It is a science that an art of correctly recording in a various books of accounts all those business transactions that result in transfer of money or money's worth. It is the body of knowledge pertaining to recording of business information accurately so that it may be communicated more effectively to the interested party. The definition of bookkeeping is it is an art of recording business transaction in a set of books. In a conclusion of bookkeeping involves systematic record of business transaction in a main book of account for that is journal, preparation of necessary account in another books of accounts that is ledger, and making the posting there from journal therein from journal. At the end of the financial year, balancing of all accounting open and operated in ledger, and finally on the basis of these balances extracted preparing a trial balance. And on using the trial balance, company or business accountant can prepare a financial statement knowing trading account, P&L, profit and loss account, and balance sheet. So here have the difference between bookkeeping and accounting. While we are studying bookkeeping and accounting, that time we get the scope. Bookkeeping is concerned with identifying financial transactions, measuring them in money terms. It means in bookkeeping we are recording just a transaction which are in money measurement, recording them in the books of accounts and classifying them. But in the account scope of accounting is concerned with the summarizing the record transaction, interpreting them and communicate the result to the users. Means bookkeeping is only just recording the transactions, but accounting is doing many work on the recorded data. The stage of bookkeeping is a primary stage and accounting is the secondary stage. It begins where the bookkeeping is end. After ending the bookkeeping process, the accounting process is start. The objectives of bookkeeping is to maintain systematic record of financial transaction, and the objective of accounting is to ascertain net result of operation and financial position and to communicate information to the interested parties. Then the nature of job. Bookkeeping is the routine work where day-to-day transactions are recorded in the bookkeeping. But accounting is job is analytical and dynamic in nature. So most of the accounting work is performed after completing the bookkeeping work, and whatever data are recorded in bookkeeping, they are taking making some statements. Maybe after a week, after a month, 3 months, in a year, while that financial year is closed, that time the balance sheet is prepared, P&L account, profit and loss account is prepared. Who perform the duty? Bookkeeping performance by the junior staff that perform the function of bookkeeping, and senior staff perform the function of accounting. Means while we are seeing that who the person who just not having the knowledge of accounting or detailed knowledge of accounting can be do bookkeeping work, but the person who is specialized in accounting, only that person can perform the accounting work. Means for bookkeeping there is no need of specific knowledge, but in accounting work there is a need of specific knowledge. Then while we are seeing that relations, the bookkeeping is the basis for accounting, and in accounting begins where bookkeeping ends. Then while we are saying that is accounting a science or an art? Then yes, we can say that accounting is both an art and a science. Science means accounting is a systematic process that uses organized method to study and understand financial performance. It is based on certain principles and involve finding and presenting financial results in structured way. And art means accounting involve creative judgment and skill in applying established accounting principles and rules. It also requires training to perform accounting function as well. Here we can say that the financial accounting has to follow certain ethics, rules and regulations, restrictions, principles and norms, accounting concept and accounting conventions, advanced accounting theories and practices that have been established. So like a science, accounting is also having some rules, some guidelines, some set of guidelines which should have to be followed in a systematic manner, is more useful in future for decision making purposes. Hence it is more appropriate to treat accounting as a science. And while we are saying accounting is an art, that time in accounting practices the professional manager has to use his versatile knowledge in regarding to recording the business transaction in a moderate way. The comparative presentation method of the books of accounts to know the periodic performance is also an art. There are certain complicated accounting issues like depreciation, amortization of assets, revaluation of assets and liability, valuation of goodwill, valuation of stock, appropriation of expenses, where The accountant has to follow the professional skill along with the well recognized norms and conversion. Thus, accounting can very well to be treated as an art. Some says that accounting is not an exact science but because it's constantly changing. For example, different accountant may account for a transaction differently due to the different interpretation of the same gap. These interpretation can be influenced by personal preference or cultural differences. Thank you.